Freeland's fall economic update happened a few days ago, and there's been a lot of chatter about it online, but I wanted to break it down for you in today's video. We're specifically going to be talking about the relief that's going to be coming potentially, or at least they have the plans to bring this relief to mortgage holders in Canada and renters in Canada. I've got my own thoughts on this and how this will actually impact things long term, but you'll have to watch the whole video to find out. Welcome back to the channel. My name is Tom Storey. I appreciate you being back here. All I ask, if you learn anything new in today's video, or you just had a good time watching, throw this video a like. If you haven't already, make sure to subscribe to the channel. If you so happen to be watching this and you live in the city of Toronto and you want expert real estate advice, you can go to the first link in the description and book a call with me at a time that works for you. This update talked about airline tickets and grocery prices, but in this video, we're just focusing on the housing side of things. Now, I do anticipate that some people are going to like this. And some people that want to see the market go in the opposite direction, that will give them the opportunity to get into the market, will not like this. Because on the surface level, without digging any deeper, and we are going to dig deeper in today's video, basically what the federal government is saying is that, hey, if you're a renter, we're going to try to make sure that rent prices don't go up as fast as they have been before, but you might remain a renter. And if you're a homeowner that's on the cusp of not being able to make your mortgage payments because of all the interest rate hikes, well, we're going to find ways to keep you in your house. So it's kind of like, well, if you own real estate already, but you're not in a great position, well, we're going to help you. And if you're renting, well, it's not really going to help you get into the market because we're going to help the people up there not come back down here. Does that make sense? Anyways, let's get into it. So the first thing that we have to talk about is the Canadian Mortgage Charter. So this is something that they say they're going to put in place. I'm going to go through every single aspect of it with you here today. Okay, so the first thing we have to talk about, what does this actually mean? Essentially, this mortgage charter is going to help people that are in tough financial positions because of the change in the interest rate. So let's go through it. They're going to allow temporary exemptions of the amortization periods of mortgage holders at risk. Okay, what does it mean to be a mortgage holder at risk? I don't know. I'm sure we'll learn more about that over a period of time. They're going to waive fees and costs that would have otherwise been charged for relief measures. Again, I don't know exactly what that means. Maybe that's like appraisal fees or things like that, or moving your mortgage around. It's going to charge you a big penalty. They're going to waive those fees. They're not going, this one I think is pretty big, not require insured mortgage holders to requalify under the insured minimum qualifying rate when switching lenders at mortgage renewal. So there are a lot of people right now that are coming up and they're going to have to renew their mortgage. And let's say they have 6 months left and they have to decide, am I going to stay where I am, the bank or lender that I'm at right now? And the reason that I would stay there is because it's easy. I don't have to do anything. I have to sign this paperwork. And the way that it currently works, if you stay at that institution, you are not re-stress tested. You're good. You have the loan. If you keep paying, you're good to go. You're going to get a new rate, but they're not going to requalify you. If you were to change lenders and go find a better rate, you were being requalified. And that stopped a lot of people from changing lenders. They are now saying that you can change lenders and you're not going to be requalified at the higher stress test. So it's basically removing the stress test from requalification of mortgages if you change lenders. I do like this. I think this is a good thing that they did. Now, as we continue to go, they're going to say that the banks or lenders have to contact homeowners 4 to 6 months in advance of their mortgage renewal to let them know what their options are. Okay, pretty straightforward. You would think this was already in place. They give homeowners at risk the ability to make lump sum payments to avoid negative amortizations or sell their principal residence without prepayment penalties. Okay, so let's break that down into 2 different things we got to talk about. Sell their principal residence without any prepayment penalties. Basically saying, like, if you're in a tough spot and you can prove that you're in a tough spot, you can sell your property with 3 years left on your fixed rate and you do not have to pay that massive bank penalty. This is big. This is big here. I'm not sure how the banks are going to react to all these new rules because this is not in law right now, right? This is something that they're saying they're going to do. I'm sure they're going to have pushback from the banks on a lot of these statements. And then giving homeowners the opportunity to make a lump sum payment to get out of negative amortization scenarios. This is interesting because most people that would be at risk of not making their payments also aren't going to have the funds available to make a lump sum. But let's say you couldn't make a lump sum for another 6 months because that's the renewal date of your mortgage. Well, they're going to say, okay, you can do it now to get out of negative amortization. This potentially could be family, friends, I don't know, someone helping you make that lump sum. I'm not sure if there's any stipulations on where that money is going to come from. And then the final thing is to not charge interest on interest, okay? In the event that mortgage relief measures result in a temporary period of negative amortization. For homeowners that are potentially at risk or feeling the heat right now, all these make sense. Totally makes sense, right? Now, some people could say, oh, this is just the federal government bailing out people that made bad financial decisions and they shouldn't be bailed out like this, and this is just propping up the market again. I don't disagree with you. I can see both sides of the conversation here. I think the comment section of this video is going to be pretty interesting. Now, what if you're someone that's in a position that you're renting right now and the rental prices continue to go up and maybe your property gets sold and you have to find a new rental and you're like, man, these rental prices are crazy. What are we going to do with rental prices in Canada? Well, there could be some rental relief coming, but it's not coming right now. It's not coming tomorrow. It's not coming next year. It's coming in a few years from now. Now, I have my opinions on this, which we will get to. But here is the rental relief program. $15 billion in new loan funding starting in 2025-2026 for the apartment construction loan program to support more than 30,000 new homes. $15 billion to build 30,000 new homes. Seems like that's something that should be able to be done. Now, this is ongoing for what we already had formerly known as the Rental Construction Financing Initiative, which will now see 100,000 homes built between now and 2031. I hope they hit those targets. And then $1 billion over 3 years, again, starting in 2025, 2026, right after an election. Again, smart politics here. For the Affordable Housing Fund for more than 7,000 nonprofit co-ops public housing by 2028. This is something that we've talked about on our podcast. If you listen every Sunday on the Tom Storey Show channel, is that the federal government's way of creating more affordable housing typically goes down the rental path, right? They're building more rental properties where you don't have ownership in it, but you get housing at a reasonable fee. Right, that makes sense, right? But I think most people, not all, but most people still have the dream of owning a property in Canada. If you just look at the next 10 years of immigration, even if we build all these homes at the rate that they need to be built at, unless you're changing something limiting how many properties someone can own in Canada, I don't see a massive change here. I do think interest rates remaining higher will obviously stop pressure on housing, but it does then mean less housing starts being built for the future. So there's a ton of different variables here. I hope that you found this video valuable. I'd love to know your comments, how you feel about this. I think some people are going to feel really good about this. Some people are not going to be happy about this. Either way, let me know below. Thank you so much for watching the video. I'll see you next time.